ladies and gentlemen. That was a great panel discussion on sustainability, and still sticking to the same and very important topic. We are moving to net zero and decarbonizing your portfolio. Our moderator for today is Eric Van Ong, Director at AM Power. He will be joined by the following panelists: Hiro Mizuno, Founder and CEO at Good Steward Partners; John Moore, CEO at BNEF; Mohammed Yusrizki, Chairman at Cardinal Net Zero Hub; Abhay Pargava, VP and Regional Leader for E&E at Frost & Sullivan; Timuchin Engen, Senior Director and the Cross-Practice Country Coordinator for the GCC region based in Dubai, S&P Global; and Enes Bachar, Founding and Managing Director at Spesatura Advisors. Can I please ask the moderator and all panelists to join me on stage? Thank you.
Welcome, ladies and gentlemen. It's a pleasure to be moderating this session, which will all be about decarbonizing your portfolio and moving towards net zero. I'd like to give a brief introduction of the panelists, because we have some fine industry leaders here to be on our panel and answer the questions that we have for them. First of all, I'd like to introduce Mr. Hiro Mizuno. It says Good Steward and Partners, but Mr. Mizuno is on the board of Tesla. He's been on the board of Danone. He's run the biggest pension fund in Japan, GPIF, and he is also, or used to be, the special envoy of the UN. We have John Moore, who is the CEO of Bloomberg BNEF, so the new energy finance. I think we all know Bloomberg and their capabilities. We have Mr. Mohammed Yusrizki, who is the head of Cardin. For the people that don't know, Cardin is the Chamber of Commerce in Indonesia, and he is leading the Net Zero Hub, so he's all about sustainable energy. We have Timuchin Engen. He is responsible for this entire region on behalf of Standard & Poor's, and he will be asked some specific questions on the regional issues that we're facing or challenges that we'll be facing. Then we have Abhay Bhargava. He is running a big advisory firm called Frost & Sullivan. And then we have Enes Bachar. He's also here on behalf of a big consultancy company called Spesatura. I hope I pronounced that correctly. But these are our panelists. Given the time frame, I would like to start with the questions immediately. And the first one is actually for Mr. Mizuno. And this is about how can sustainable technologies help in reducing the carbon footprint of large organizations, such as corporations and governments, and what steps can be taken to ensure a smooth transition to these technologies?
Thank you very much. Thank you, AIM, to invite me to speak at this conference. It's always exciting to be back in Abu Dhabi, where things is happening. I think the innovation and technology should help all the organization, whether you're big or small. And then the government probably be the last one to really benefit from that, because they are not particularly designed to take the advantage of the innovation. But talking about the corporation, innovation has been driving, first of all, their corporate valuation. If you look at over the last, the almost 2 decades of how the global capital market reacted, it's innovation who has been driving the valuation, the value of the company. So any, the corporation which comes up with a new innovation will have the opportunity to increase their shareholders' value, and that's resulting in a better performance of the pension fund as I used to manage. So innovation is critical, but what is very important is, some of the people uses the innovation as a sort of like their psychological resort, not to take an action on today. So,
Sorry?
Sorry to bother, but I'm just saying, can you get the mic closer?
Mic closer? Okay, yeah, thank you. So, okay, this is already very close. But so I think what we have to remind ourselves is it's good to talk about innovation. Innovation always accelerates the transition, but don't take us the psychological result in one day innovation will help us. There's a lot of things you can already do today with the existing technologies, and then at the last year's this year, Tesla's investment meeting as a part of the Tesla's Master Plan 3, we proved that just with existing technology we can achieve carbon neutrality. So that's what I think is just important.
Thank you so much. Mr. Timothy Engine, how do you explain the interest of investors in understanding that environmental exposure of companies, and what are their evolving expectations? I mean, we already heard that shareholder value, of course, is a very important driver, but how do you look at this?
Thanks a lot for this. I hope you can all hear me all right. As you mentioned, we can talk about shareholder value, creditworthiness, return for other stakeholders in the company, and I think there is a lot of developments. You can talk about the regulatory factors, or the fact that asset owners are pushing asset management companies to have full ESG integration, to adapt ESG mandates. But I think financial materiality and an increasing understanding of that has been probably the most important driver. So you can't necessarily put all investors on a single bucket, but generally when an investor, they look at an asset or a company they want to buy into, they want to be able to analyze all the factors that's going to drive the risk and return of that investment. So it's not just financial statement analysis. They also have an inherent interest to understand the environmental profile. What type of exposures does that company have? If they have high emission levels, how do these emissions compare to their peers in the industry? And these questions, if anything, are becoming more and more detailed and forward-looking as well. And this has a lot to do with the regulatory development. Let's give an example. You are a London-based asset manager. You are looking at adding a few new companies to your portfolio, and you found that company, let's say, in Turkey. So the company has very strong returns, very low leverage, very interesting investment assets. But you also find out that their emission levels as part of their production is super high. There is no carbon taxation in Turkey now, or an ETS, but there is a likelihood on the back of CBAM they might also have their own regulations over the next few years. And for this company to comply with these regulations, they might need to incur a significant amount of capital expenditure, or their future revenue generation might decline quite a bit. So as an investor, you want to be able to talk to the management and understand what they are doing, what's the roadmap, what's the forward-looking guidance. And as regulations continue to develop, I think we will see more of that.
And how do the GCC companies respond to these investors' expectations?
Yeah. I think we are starting a bit late, let's say, relative to Europe. For a good part of the past 10 to 15 years, European companies had done a lot in this space. The first initiative is hiring, because most companies, they know their core businesses very well. You know how to produce, you know how to manage your cost, you know how to sell. But when you incorporate sustainability into the equation, you begin to ask a whole set of new questions which you might not necessarily be familiar with. Okay, you are producing this item, but what type of emissions are you generating? If a regulation kicks in the future, how will you manage these emissions? Will you be able to get into projects for abatement? So this requires a new knowledge base and the initial instinct to go out and do a lot of hiring of sustainability professionals to build the internal capacity so you can identify, manage your exposures, and go beyond that, communicate your exposures to the external market, to institutional investors as well. So in Europe, we have seen a lot of development in this space. In our part of the world, we are relatively a newcomer, but developments they've been phenomenal over the past few years. We are seeing a lot of sustainability-related hiring. We are also seeing managements using sustainability teams way more frequently when they talk to investors in their earnings call or road shows, and I think this will continue to increase.
Thank you. Mr. John Moore, what are some of the challenges that companies might face when implementing sustainable technologies, and how can these challenges be overcome?
Sure. Thanks, Eric. I suppose I would answer this in sort of three ways. Decarbonization is a complex task and really needs to be addressed from the top down. So you really need the CEO and the management team to really set the goals, really set a target, a strategy, work on their own modeling, and really have a clear vision for where they want to get to. Secondly, you then need buy-in. So from your staff, you have to have, if you convince your staff that this change is a good thing, you also have to convince your shareholders and explain to them why this is going to be a good thing, a positive thing, where the downsides may be, those kinds of things. So the sort of buy-in phase. And then you get into implementation. And in implementation, there are many, depending on what the actual strategy is, there's many. It may be infrastructure challenges like grid investment, maybe policy challenges, incentives you need, maybe training, staff skills and those kinds of things. So it really is, it's like all good strategy. It starts at the top, needs to be well thought out, and then well executed.
Thank you. To focus in on some of these strategies that you would potentially have, like, first of all, how can the sustainable technologies be used to achieve the carbon neutrality? I think that's an important one, or the net zero emissions. And what are some of these strategies then that companies can adopt to reach these goals?
Right. So I mean, I suppose we put these clean technologies into two buckets, like phase one, phase two. Phase one is absolutely ready to roll. So wind, solar, batteries, electric vehicles. These should just be. It's about implementation and deployment. It's about really getting on and building out technologies that already exist. Then there's sort of phase two technologies like hydrogen, CCS, where you're more in an R&D phase. So you really need to, do proof of concept. You need partners to work on projects, etc. They're not ready to roll in terms of operationalizing, but you need to build skills. You need to work out where these technologies fit in your strategy. And then the other thing I would say is, think about sort of scope 1, 2, and 3. I think that's how shareholders and investors think about it. So, scope 1 is your own operations, which depends on your own business. Looking at all of the aspects of your operations to decarbonize. Scope 2 is the power. So a lot of people, buy power purchase agreements or self-generation if you're a large scale. And then scope 3 is the most complex, sort of the whole supply chain and customers. But again, you have to start addressing those issues and putting those into your strategy, because that is how the capital markets and investors are going to start to compare you to other companies. So that would be the other thing I would recommend.
Thank you. Mr. Bachar, you have a more agricultural background. How would you answer this question? How can these sustainable technologies help you to realize or reduce your carbon emissions?
Yeah, thank you very much. I think in terms of technology for every industry, we can split into three different type of or segment of technology. The first one is tech is very helpful to make things more convenient, like making an iPhone smaller, going somewhere faster, etc. The second thing is technology could enhance and make projects more profitable. The third is technology can help to find critical solutions for very big issues. In agriculture, we are in this third segment. With climate change and what's happening now, we need technology. It's not a nice to have, it's a must to have today. So in agriculture, fortunately or unfortunately, agriculture is in the same time the cause, the solution, and the victim of climate change. I will tell you why. The cause, you know it, agriculture is responsible for more than 20% of emissions. It's the cause. The solution, because we need trees and we need forestry and agroforestry to absorb carbon. And the victim, and this is a bad news, because the most impacted industry or activity of humans on Earth by climate change is agriculture and food. We know by fact today that we can no longer produce, we can no longer use the water that we have, suitable water for agriculture, as we have done for the last 100 years. And I think that the technology we need in agriculture is not the nice one that makes things convenient. It's not to increase profitability, but it's to find critical solutions to our food future.
So that actually means that we can recognize a financial risk that is associated with climate change. And that, I think, maybe Mr. Mizuno can answer this one. To incorporate sustainable technologies into investment strategies, what role can these sustainable technologies play in creating long-term value for investors?
Well, I think given the world is now committed to carbon neutrality, and then the question is how quickly the businesses and each a sovereignty can really draw the road plan to achieve it. And then so far, I think the capital market is more driven by the commitment. The people are so excited when the government makes a commitment for the carbon neutrality by 2050 at the Glasgow. And then also the Glasgow COP, 450 financial institutions committed to make their portfolio net zero by 2050 on the platform called the G Funds, right? But it's still all about the promise to deliver it. But nobody actually come up with the actual action plan. And then at the moment, I think the capital market and the whole financial system is, in my opinion, struggling to take that real action, a real product, and the roadmap into their valuation. So I think that for the time being, we're probably going to struggle that the how to address the commitment, the actual innovation, the actual roadmap or their business, the strategy. And then Tesla is a good example. Tesla has been producing EV from day one. And the Tesla cannot get the higher E scores by some of the analysts compared to the legacy automaker who made a promise to deliver more electric vehicle. So the innovation is one thing, like related to my earlier comments. It's good to have, and that's going to be a driver of the investor's portfolio. But investor really cannot rely on the invention happens when the company commit to do something. So they just need to have better view on the how to kind of like put that the time frame into the innovation. And then I must tell that say that the currently capital market is still failing to do that.
Thank you for that answer. We also see that governments are committing to carbon reduction. One of these countries I know a little bit better is in Indonesia. They've committed to the Paris Treaty and are taking big steps in decarbonizing their portfolio as a country. So, Mr. Hughes, how can investors or how can sustainable technologies be used in conjunction with other decarbonization efforts, such as carbon pricing, to achieve maximum impact in reducing carbon emissions?
Thanks, Eric. Hi, everyone. Let me a little bit tell you about the Cardinal Net Zero Hub, our new platform in Indonesian Chamber of Commerce. This platform was established recently after COP26 in 2021, and we are assisting Indonesian companies to start their net zero journey. We are helping them to do the baselining, to do the GHG protocol, counting based on the GHG protocol. We're also adopting SBTi, a science-based target initiative, to be the framework for the Indonesian company to reduce their emission. As well as we also encourage them to disclose their climate action through many platforms like CDP. Even we ask them also to align their sustainability report with the TCFD. Well, this is only 2 years, journey for us, almost 2 years, but we learn a lot. So asking to the question that Eric mentioned to me, was asking to me, yes, we learned that sustainable technology do not operate in the vacuum. They are not merely technology that we adopt, but how do this technology enable us to achieve our target? And when do we implement those selected technologies, considering maturity, economics, and of course, the regulatory landscape? This is where I think carbon pricing is having a big role to drive more adoption of sustainable technology. But let me share with you our case in Indonesia. A year ago, when we had the carbon tax issue the first time, about more than a year ago, there is huge objection from the private sectors, including from Cardinal Indonesia. But from that lesson learned, we saw that the private sector is always becoming an object. This is something new for most of Indonesian companies. So Cardinal Net Zero Hub or Cardinal Indonesia trying to help Indonesian company to address this unknown, so to speak, factor, because this is something new. So then we encourage the company to be not on to be the object of this conversation, but we need to be the subject. So this is something that systemic change that we try to do, including when we are now having this carbon pricing. But first thing first, I think we need to have a credible transition plan within the company, because this is the engine, right, of this transition. The company has to really develop a credible plan, including technology is a part of the plan, right? So after that, I think we need to be the subject, right? We need to have discussion, participate in conversation with the government on making or shaping this policy. Not like what carbon tax a year ago until now, by the way, the carbon tax is being postponed. This incentive, the carbon price as being an incentive for private sector, for companies to drive more decarbonization effort, I think need to have also a new attitude towards this policy making process. So that's what I think I have to share the Indonesian case. Of course, most of the, I think, audience coming from more advanced market or ahead of the curve market. That's what we all want to learn from you guys. That's great.
So, and if you look at the different stakeholders, I mean, as the head of Cardin, you're dealing with, on the one hand, government, you're dealing with corporations, you're dealing with investors. How important is that cooperation between the different stakeholders to achieve the carbon neutrality in the end?
Well, like I said, I think the key here, this is actually the work that we've been working on, is the credible transition plan towards the net zero. This is a must-have for companies. Adopting global framework like GHG protocol, SBTi, that's something that we want to do now, that we are working on today. This transition plan is a holistic plan covering all aspects of operation, investment, and expansion plan, value chain engagement, and of course technology, and why to achieve these decarbonization goals. Like I said, technology has to be part of the plan. So to accelerate this collective action or ambition, decarbonization ambition, investors should pay attention to this plan. I can understand a lot of investors really, promoting one or few technology because they are having, familiarity or they have sponsoring the such technology. But let me tell you, we want to have investors to be partner in transition rather than positioning themselves as a technology or intellectual property owner. Because that's what the discipline now that we are building up in Indonesian private sectors. And of course, from the government, if you see the government as one of the major stakeholders in this transition, mature technology with the government incentives are always an upside for mature technology. But how we link this incentive from the government with the emission reduction target, that's also a key for us to have together to get more support from funding, public funding, for example, for investor. So then we can tell to the bankers, to the investors that this ecosystem works for one goal: emission reduction. So I think that's the conversation that we now trying to build in Indonesia. So then, from the beginning, from the starting point, we have very credible process. So then, a lot of FDI, investor, and all other components, enabling element can come to Indonesia and to support the new, Indonesian economic platform.
Thank you. Mr. Bachar, in the agricultural sector, how important is the role or the cooperation between the different stakeholders, so government, companies, and as well the investors?
I think it's the need for cooperation between all the stakeholders it's even more critical for agriculture. In many countries, to secure the production and the food, many public entities are actually involved heavily in agriculture. From the investors' standpoint, and actually we were helping many investors during the last 10 years to invest in special ag assets. I think agriculture is still today not benefiting from as much as investment it needs to have for many good reasons. As an investor also, I can see it, because you still have some intrinsic risks in agriculture. You know, agriculture is one of the jobs where you can do everything good, but the outcome still can be bad regardless of your job, because of climate, because of water, because of, and we are into operating farms, so we know it also by fact. So I think it's, in many countries, all the stakeholders that you mentioned are involved and heavily involved. One of the examples is Morocco, for example. Morocco, during the last 25 years, heavily subsidized agriculture investments. They thought about it like, okay, we are importing, for example, a lot of dates, palm dates, from outside, so they decided to heavily subsidize the dates production in Morocco. This one action from one stakeholder helped and convinced a lot of international investors to invest into palm dates in Morocco during the last 15 years. So you have a very concrete example where, with government incentives, I'm not saying that it's good to subsidize, to heavily subsidize an industry, because it's a different topic, but you had a...
I agree, and I think in agriculture, sustainability is more than just decarbonizing. It's also about other ways of farming, trying to get rid of toxins. I mean, it's a different way of thinking that I believe that agriculture makes a really important, or takes a really important place in this aspect. So it's basically a new way of thinking, a new business model for agriculture. But these new business models also are very imperative for other businesses. So maybe, Mr. Bhargava, how do you see, let's say, the new business models by use of sustainable technologies, and what kind of opportunities do these models present?
Yeah, thank you for that question. It's quite valid, right? Because most people, when we talk to them about sustainability, I get people talking to me about compliance, or I get people talking to me about social responsibility, right? But at the end of the day, you can't sustain sustainability unless you're making money yourself, right? And that's where business models step in. Fundamentally, it's about where you're creating value and who you're creating the value for. So the way I look at it is, it's important to, when you look at this whole vast world of sustainability, it's important to first figure out and define who you're wanting to create that value for, who you're prioritizing, right? And as a next step, there's a whole bunch of areas where you can start monetizing things, right? And I think I'm just correlating with another one of your questions previously about challenges, and I think one of the challenges relating to sustainability and adoption is really the monetization part. So you can start taking a look at how different business models around resource reduction of resource usage are coming in, right? So the whole aspect around the sharing economy is probably the most popular part. But I think at this time, when the world is coming out of let's say the COVID shock, disruption of supply chains was a major issue. Getting closer to customers became a major challenge. And I think that's where, sustainability fits in. Utilize locally available resources, utilize recycled, repurposed components and resources, right? And redefine your value chain. cut down on transportation and logistics emissions, and you got something to do with decarbonizing your portfolio, but it also yields, it also makes a lot of business sense because you're engaging more with the community, right? And at the same time, you're trying to deliver stuff that is more meaningful to the customers you're trying to address. So we've already started seeing elements of intra-regional trade that have started happening, right? Globally, we earlier had a phenomenon of centralized manufacturing and then ship everything everywhere, right? But more and more, if you start taking a look at trade pacts and you start taking a look at where things are moving, we're seeing an intra-regional trade emerge. And I think that's where sustainability again has a play on business models, right? So that's the second, I would say, core aspect. I think the third aspect is really around the whole element of reverse logistics. It doesn't matter what industry you're talking to. You know, you could be ag-tech or agriculture. You could be talking to me about oil and gas. You could be talking to me about electronics or, you know, renewable energy. At the end of the day, you know, you start applying the fundamentals of, say, EPR schemes or take-backs, right, and avoiding waste. You know, from a sustainability point of view, you're really talking about an emergence of reverse logistics. And that as a fundamental service is really creating new business opportunities and models for the market. So I think those are some of the core areas to look at. But again, you know, if I was to bring all this back and roll it up, I think at the end when you talk to anyone about business models, it's about just very carefully defining who you're creating value for and where you want to deliver.
Yeah. Thank you so much. Mr. Mizuno, you wanted to say something about the agricultural part and sustainability.
Yes, I've been, you know, looking at where the money is going from my time at the government, managing government pension fund. And one of the area which really require the just transition in agriculture and farming. And then obviously we talk about a lot of just transition for energy sector, but I'm less sympathetic to energy company or oil and gas company. They accumulate a lot of wealth by now, but the farming and agriculture, they really build a very little wealth. So it really requires the real financing to support them the fair transition. But at the moment, there's no global index or like you know, the systemic investment tool which actually promote more investment in agricultural farming. So I'm on the board, mission board of Danone, where we are trying to promote the fair transition. But I think we need to raise more discussion on how to deal with the fair transition for agricultural and the farming sector, because it has been very little discussed.
Could I just add on that? I mean,
Yeah,
we've started to do, over the last couple of years, more research on that. And what we found is that biodiversity alongside agriculture and land use is a really, really powerful way of looking at it, because biodiversity really does contribute to the real economy. It's something like $2.7 trillion is the value of biodiversity, and to protect it, it costs about $1 trillion. So there really is a business case when you think about agriculture and biodiversity together. So that's sort of how we've found that sort of sums that up even better.
That's very interesting, and it actually coincides with research that's been done in the Netherlands as well on farming, where they moved away from using toxins, and they were absolutely surprised by how fast the soil would recover and have a much bigger biodiversity in the soil, which led to new crops which were actually highly profitable. So that, thank you for that very valuable information. Mr. Bhargava, one thing that I'd like to understand from you as well is, do you see any limitations or potential risks associated with the use of sustainable technologies?
Well, I think it's, you know, yeah, like, if you take a look at anything, there are, of course, risks and limitations associated with it. At the moment, you know, the risks are really around integrating those technologies from an operational or you know, business model point of view. What I mean by that is, you know, It doesn't matter, again, what technologies you bring in. It could even be on the agtech side, etc. It's how do you integrate that into your operations? And there are some limitations associated with that all the time, right? What is the cost associated with, incorporating sustainable technologies, and how do I get benefits out of it? I think that's the single largest limitation that we've observed in quite a comprehensive survey I remember we carried out on adoption of sustainable technologies some time back. And it was about people, coming back and citing lack of awareness, as a major challenge, but then talking about, challenges on integration. I think the single largest limitation I would see out there is then on financing. Don't see the financing ecosystem still completely geared up to deliver on sustainability at the moment. We have investors talking about aligning themselves to, to sustainable portfolios, yes. But are you seeing enough bespoke products that are coming up that comply with the needs of, say, small-scale adoption of sustainability? Probably not. So I think that's another limitation out there associated with this.
Okay, thank you. If we focus in a little bit more on the local region here, and maybe that's a question for you, Mr. Engin. Are there any emission abatement initiatives in the GCC and the UAE? Yes.
Yeah, I think quite a few of them has been covered now. I would say structurally it's not super different than the other regions. Basically, globally, you look at where the emissions come from. Power generation pretty much is the largest contributor. Then you look at industry, transportation, agro, and some other subclasses. And in our region too, the distribution is not very different. And power generation is a challenge, but it's also a big opportunity for everyone, because in terms of all these technologies that's being discussed, probably it's the one where we have commercially viable solutions, technologies that are well established. So if you look at Europe, there's hydro to decarbonize your power generation, or offshore wind or other sources. And if you come to our region, what you see is predominantly solar. We have been relatively late at this game, but as you all know, over the past 4 or 5 years, we have seen significant investments in this place. There are quite a few reasons, such as declining solar PV installation cost, very strong yield on solar assets. UAE was leading this for the past 5-6 years. We now have Saudi also investing heavily. And in another technology probably in the power is the offshore wind. And in addition to that, we are also now hearing about new technologies such as green hydrogen. But similar to elsewhere, outside decarbonizing the power generation, all the authorities, they are also trying to tackle transportation and industry. So we will continue to see a lot of abatement projects, particularly with the large government-related entities over the next several years.
Thank you. As we're running through our time pretty fast, I'd like to give each one of you an option to make a closing remark, if any, starting with you, Mr. Mizuno.
Yeah, thank you. I think the one last message from me is like, as we deliver innovation in the electric vehicle at the Tesla, all the industry have to use their own skill and innovation to promote sustainability. But from investors' viewpoint, I think to really shift the market, we really need to address the role of index and the credit rating. Without the changing those systems, we really cannot shift the core of the market. And then on the top of that, we need a more focused asset managers and more focused the investors in the particular sector like the energy or the food, which we have been addressing. So we need to bring in more expertise into the market and really change the systemic issue of the market, really address this transition to carbon neutrality.
Thank you so much. Mr. Moore.
Yeah, I mean, the thing that I would say, particularly from a company perspective, is that this is a fantastic business opportunity. So we found the companies that move the most aggressively and are succeeding the most view this as a positive business opportunity rather than a risk. And so, you know, there's going to be 200 trillion or so invested in these technologies in the next 3 decades if we're going to get close to net zero. And so it's being one of those leading companies to attract that investment. I think that's the best thing that companies can do, focusing on technologies that make money. So these things are not going to scale unless they're profitable. So it's not going to be subsidized forever. So there's a small number of technologies that really are going to be clean and profitable, and those are the things that are going to scale massively, as things like wind and solar are already. And so yeah, I would view the transition actually as a sort of once-in-a-lifetime business opportunity.
Thank you. Yus?
Yeah, sorry. I would like to use this as an opportunity to say that Indonesia is moving towards this low-carbon economy. And from Cardinal Indonesia, from our Chambers of Commerce perspective, there is no other pathway except this is the only viable pathway for Indonesian company, for Indonesian economy to grow. Becoming a net zero economy, that's the only way. If we want to have a dream, 2045 Indonesian 100 years old, we want to be the 5th largest economy in the world. There is no way we can be the 5th largest without most of or some of big companies in Indonesia become validated SBTi company. I heard there will be 10,000, the target of SBTi to have 10,000 company globally validated SBTi company. So having 1, 2, 3, 4, 5% of those 10,000 or about 500 Indonesian company validated in 2045, that's our dream. So without that, there is no other country in the world will do trading with Indonesia. So be part of our partner in this transition. And like John Moore said, this is a huge opportunity also for investment, for technology partners to come into this new ecosystem. Thank you.
Thank you. Mr. Engi.
Yeah, I mean, my colleagues talked largely about the technology. My specialization is on the economic analysis. So basically, the way the companies across these industries, particularly in heavy emitting sectors such as commodity chemicals, building materials, aviation, utilities, to name a few, how they adopt these technologies in a commercially viable manner will determine their long-term survival rates. So it's going to be an interesting ride.
Mr. Bhakrava.
Yeah, I think I probably agree with also what John just said about the points around this being an opportunity and not a risk, and I think it's really a mindset. For me, there are really 3 takeaways I'd leave with you. One, it's if you're looking at really decarbonizing a portfolio, it's about thinking of it from a value chain point of view. Number 1. Number 2, it's really about thinking life cycle. It's not transactional. It's life cycle. Okay, that's really critical to keep in mind. And I think at the end, from a mindset point of view, the third aspect is about going ahead and looking at monetizing, not just complying. So there has to be an element of profit and value for the corporate in whatever you're doing. Otherwise, you can't sustain your actions. So those 3 aspects are really the final takeaway here for me.
Thank you so much. Last but not least, Mr. Bachar.
Yeah, thank you very much. I think we are
you know, from the financial world, we're leaving the zero interest rate world, right? We lived in that for the last maybe more than 30 years. This means for technology more competition. Investors will be looking much more into where we invest or not, because interest rates now are very high and costs of funding are very high. Competition is good for tech. We know that. So I think the ecosystem will be tougher, but we will see very interesting technologies that will come up and help us decarbonize our economies.
Thank you so much. And that actually brings us to the end of the session. I would like to thank you all for your contribution and hope to see you very soon. Thank you so much.
Thank you.